High rates are also dashing hopes for a bigger recovery in the housing market. And even the one bright spot in recent years, the homebuilder ETF, is down 15% in the past 3 months. My next guest thinks that move has been sharp and unwarranted. John Lovallo is back with us. He's a senior homebuilder analyst at UBS. Unwarranted, John? I mean, mortgage applications were just at a 30-year low.
All right, thanks so much for having me. Look, I think the fact of the matter is that underlying demand is still actually pretty good. The most recent data from our Evidence Lab Housing Intention Survey still shows that 31% of buyers intend to pull the trigger over the next 12 months. That's above the historical average of 30. The intent to buy is different than the ability to buy, and we know that there are headwinds out there, but we have a heck of a lot of pent-up demand. It's an underbuilt market. We think that we'll have low single-digit growth this year with the builders able to outperform that pretty meaningfully. And so I think there's a tremendous amount of fear in the market right now, and that is actually what has been the catalyst for us to get more bullish. This typically is the time when peak fear translates into good opportunities for investors.
Well, the whole setup is strange because we're in the middle of what's supposed to be this Fed, rate cutting cycle. And traditionally you see, housing start to pick up and manufacturing start to pick up and all the things that benefit from lower rates. But rates on everything but, the very shortest end have gone up instead. So even for housing, we now know this isn't going to be a big contributor to any kind of acceleration in growth at this point.
Yeah, look, I think you're right. And I think we're seeing that currently with existing home sales at pretty much at GFC trough levels. The silver lining here with higher rates is twofold. One, the public builders have the ability to offer mortgage rate buydowns to keep this demand going that is still there underlying on a strong basis. That's a big advantage versus smaller competitors and also versus the existing home market. The other silver lining is that there's a lot of concern about inventory in the market. We can sit here and talk about why we think that that's overblown, but higher rates should limit the amount of inventory that's coming back in as this lock-in effect comes back into the full force.
No, we always, joked, or it's kind of a morbid joke, but the biggest threat would be normalization and the rest of the market, right? 4% mortgage rates. So you just recently upgraded Pulte to buy, WMS. Meritage is your top pick. Just talk a little bit about what makes those the most attractive to you.
Yeah, sure. So I think for Meritage Homes, it's our top home building pick right now. I think the growth profile is among the best in class among our home builders in our coverage. Also, I think valuation across the group is very punitive. 8.5 times earnings on average across the group. And you look at a company like Meritage, it's trading right around 7 times earnings and below book value on our forward estimates. So I think that's a very compelling story there. Advanced Drainage Systems, WMS, is a building product company very much focused in terms of the home builders on the front end, which is doing the horizontal land development that goes before the builders start developing. I think that's a stock where we're at peak fear as well. So something that we think is a great opportunity. And Pulte is a builder. And we're pretty much bullish across the board. Pulte, we were a little bit more skeptical last year, just given the fact that we had thought their margins might reset a little bit more than others. They've proven us wrong, and I think the pullback has created a great opportunity.